And another test for the markets, Tesla, Alphabet are going to be the first of the Mag 7 names to report earnings. That's happening tomorrow on Tuesday. This after the NASDAQ slid in its largest weekly loss since April last week. Can the earnings reports maybe meet the street's high expectations and reverse some of this, I guess, turmoil that we have seen play out within a lot of these tech stocks here over the last several trading days? To discuss, we want to bring in Abby Yoder, JP Morgan Private Bank U.S. equity strategist. Abby, it's great to see you. So talk to us just about this rotation that we have seen over these out of these larger cap tech names into the smaller cap names. Yeah. What do you think how do you see that playing out here this earnings season?
Well, so I think there's a couple of things that are driving that. I would say the biggest move has really been because of the rate outlook, right? Like we got that softer CPI print, and that's exactly what small caps needed. And then on top of that, we did get some good economic data, right? Retail sales came in good. I think to your point on what can get it to continue to work is really going to be around earnings season, right? And I think, and this is really like, I think both the rest of the market, so the 493 and then small caps, I think they'll tend to perform the same. And right now there's some angst going into earnings. Like, okay, the Mag 7 have been driving a lot of the earnings growth and the market generally speaking. Are we going to get the prints from the rest of the market this quarter that's going to get that part of the market to start working? And I think it's really important. This is the first quarter in 5 quarters that we're expecting to see the remaining 493 have a positive earnings growth picture, right? So the Mag 7 has really been driving it. This is that point in time where we're actually expecting a inflection to positive. Mm-hmm. And I think you get that. That's when you can see things like the 493 and small caps continue to outperform.
Mm-hmm. What do you think then is the one thing investors should be looking at to suss out the success rate of that 493? I think about something like McDonald's keeping their $5 value meal as maybe a sign that there's consumer weakness. That could be bad for some of the consumer names. What do you look at?
Well, so I think to your point on consumer weakness, I think the consumer is slowing, right? And I think what we saw through retail sales was that it's slowing, but it's still healthy, right? Like we're starting to see 2Q GDP expectations revised higher above that 2%, let's call it trend growth rate. And I think what we need right now is not necessarily from all of these names to beat and raise. We need them to beat and at least maintain, right? Like I think that's really the important thing. And right now, earnings growth expectations for the market are around 9.5%. We would imagine you start to see, we would imagine a beat rate of around 5 to 7% for the market, getting you to around 10 to 11% earnings growth for the quarter.
I mean, when it comes to some of that rotation that we have seen in the market, how much of that is because of the underperformance, the expectations for the Fed? Maybe we are going to see this broadening out here this earnings season versus what we're seeing on the political side of things and some of those expectations there. Factor that out for us.
I mean, that's the thing. Like over the last 3 weeks, it feels like there have been all of these different things that are causing the market to move, and it's really hard to disentangle them, to your point. But like just looking at the performance of small cap, right? So they had that 5-day move where they were up 11%, which was like a 4 standard deviation move for them. That was driven, I would say, primarily by CPI. And then kind of at the same time, coincident with that, you had this increase in what was going to be perceived to be a red wave, right? And that for small caps is taken as, okay, maybe less regulation, maybe more M&A. And so I think that added fuel to the fire in terms of the positive view. And then there's also a technical aspect. There was a lot of shorting of small caps because they had underperformed so much. So getting some of that kind of unwind and positioning, I think, also played a part. But again, I think going forward, it's really going to be around the fundamentals as it relates to the outperformance going forward.
Vice President Harris, I want to talk about her record on tech for a little bit, because there's this idea that she could also potentially be more favorable to some of the tech companies and unwind some of the regulatory pressures a little bit. Do you think that's something that tech investors should already be thinking about, looking into?
Well, it looks like the market thinks that, right? Because this morning you are seeing more of that unwind. You're seeing the NASDAQ up more than small caps. They're both up. I think what is really happening as it relates to the market is, okay, maybe we're getting less of a likelihood of a red wave, which means maybe less intense policy changes and more of, kind of middle ground if we get some split Congress or with whomever takes the executive branch.
So how are you positioned? How would you advise investors be positioned given all of that uncertainty and kind of given the fact that there are so many unknowns still playing out at this point?
Well, I think the last 3 weeks is just indicative of why you want to be steady as you go, right? You want a diversified portfolio across different parts of the market. Tech was leading, now it's not. Now we've got small caps. Having exposure to all of these different things makes a lot of sense. I think when we're thinking about the political landscape, we're not trying to guess right now what's going to happen because things change change so quickly that it really is like you can't really trade around that, right? So just thinking about having a diversified portfolio, I think as it relates to the election, things like spending on defense will probably be bipartisan. So thinking about, we upgraded industrials, we think that names in the industrial sector will benefit from that. And then being tax efficient, right, as it relates to our clients, thinking about that.